Huh. Good afternoon, everyone, and welcome to Realty Plus Budget Live. The Union Budget 2026 has just been announced, and overall, it has set the economic agenda for the year ahead. Um, I'll say there were no headline announcements, no big announcements, maybe because the elections are already over. So government didn't need any people pleasing. But today here we will be having a sector focused lens on real estate, housing and infrastructure. And to do so, I have very eminent guest speakers with me. Right now, I have with me the tall leader of this sector, Mr. Sushil Mota, Chairman Marilyn Gupta from West Bengal, and he's also the president for CREDAI West Bengal. Mr. Mota, a very warm welcome to you. And
Thank you.
you represent the real estate sector. If I have to ask you, like I mentioned, it's not a headline making budget. If I
Yeah,
have to
it
ask
has
you,
not been a headline-making budget, but it is, as you have rightly said in your opening sentence, that elections are over, so there is no populism narrative now. Rather, government has chosen the stability path, and they are looking for 12.2 lakh crore capex plan, which will give the long-term benefit to the country, more economic rail corridors boom, and then city economic regions. That is what finance minister announced, which will bring the overall growth. But as CREDAI was expecting some inflation adjustment, I would use it as inflation adjustment. For
hmm,
example, the 24B benefit, that interest which is paid on home loan, it is there 2 lakh for last over 1 decade, no inflation adjustment. Then affordable housing, that value cap is 45 lakhs
right.
since last so many years, no adjustment there. So at least those inflation adjustment, if could have been given, that would have, increased the affordability of many people, and or at least their budget would have been adjusted because of the inflation that has not been done. The income tax slab also remains the same.
Right. If I have to ask you in one sentence, if you have to give me, the initial takeaway, or if you have to sum up this budget in one sentence, what would that be?
You see, if you see it from real estate perspective, from business perspective, it is business as usual, no changes, right? But if you see the long-term growth, it's a long-term growth-oriented budget. So when the long-term growth happens, the overall prosperities goes, the overall affordability will grow, more people will aspire to buy home. That's fine. That is there. The country is growing at a very good speed, and that will. And when the economic growth happens, real estate always benefits because more and more people become our customers, and demand for retail space or offices also goes up. The demand for logistic warehousing, private industrial estate, everything goes up with the infrastructure growth and
Correct.
capex spent by the government. So, find the stimulus is not there. Perhaps government realized that it is not required at this moment. So, there we are.
So it's a more stable budget, more long-term growth-oriented budget, no short-term stimuluses,
Yep.
as Mr. Mota said.
Yep.
Let me bring, point out, you mentioned 12.2 lakh for infra they have allocated.
Hmm.
They have also allocated tax holiday for data centers. They
Hmm.
have not specified the quantum, but till 2047. Um, how will this play? Because data center, GCC are becoming a very big part of real estate. How do you think this allocation or this AIF and REITs, again, very big part of real estate, they have not got any, there has been no provisions for them. Uh, Data centers, this tax holiday, do you think it's, how do you see it playing out?
It will
Especially,
benefit to attract more GCCs and data center capabilities, increase the data center capacity in country, because our country is one of the biggest data user. I think we will be ranking amongst top five or so. I don't have know the exactly the number country holds, but we are the biggest consumer of data. And with this kind of encouragement, more data centers will come, and that will be good overall, and it will attract GCCs, etc. So that is going to help the IT sector, because the normal IT sector is evolving now into GCC and data center and AI, and the next generation IT revolution is happening now. It's the old days where we were more of doing the clerical work, like, just the data, the medical transcription or BPO and all. From there, we are now migrating to the value-driven IT business. More
Correct.
of the knowledge process outsourcing, more GCC, data center. These are adding a lot of value added, business to IT. Uh, that is in any case happening, and with this, it will boost it further.
Nothing for AIFs, but so is this a dampener? For NBFCs and banking, they are
I
setting up a
think one thing
committee.
that government in last few years have already done a lot in those sectors. So every
Hmm.
year we should not be expecting.
Okay. Hmm. Sounds correct. We also now have with us Mr. Gulam Zia, Senior Executive Director, Research Advisory, Infrastructure and Valuation with Knight Frank India Private Limited. Zia, warm welcome to you. Uh,
Thank you
so
so
we
much,
were
Sapna. Apologies for this mess up. Internet always fails at the right last minute. So there it is. My
we
apologies.
we were just talking about data center, and Mr. Mota said that how we are now dependent on data and Wi-Fi, and that has become the backbone of our economy. My first question to Mr. Mota when he joined few minutes back was that if in one sentence you have to summarize this budget, what would that be? So for Mr. Zia, what that would be?
This budget is actually not something which is giving you a short-term kind of energy boost. It's something which is talking about a long-term focus for the country. And at times when the going is very tough due to those tariffs, etc., it's a very balanced approach that we are looking at. So overall, for the country, the budget is pretty good.
For the real estate sector now, because our focus is on real estate. So for real estate, you know, what's there in for us?
Uh, on real estate, I don't really find much. And I think when I walked in, Mr. Mota was also talking about that. That last 10 odd years, lot has been done for the sector. So every year, like I always say that post-budget interaction, especially from the real estate experts, has been a ritual where we see, the faces which are disappointed and all that. Every year after year, you see these industry body spokespersons coming on various shows and showing their expressing their disappointment. Well, to me, this sector is actually going through a good time. Last couple of years, at least 3 4 years, we have seen fabulous growth in the sector per se. So, in such times, to continue to expect more and more and more, in my view, is not appropriate. Yes, of course, a lot needed to be done for affordable housing, where at least I don't see much of an impact coming in because it's a work in progress, I guess. However, there's one sector where most of these developers whom we're normally talking to are not even present because they've migrated lock, stock, and barrel into upper end and the luxury housing. So here, if it is about affordable housing, yes, a lot was expected, but that's not what most of the developers talk about.
Okay, so affordable housing, but I was just pointing out few provisions that were made in the budget. There is a 40,000 crore allocation for SME growth fund, 12.2 lakh for infrastructure, like Mr. Mota pointed out. Committee for NBFC and banking, though for AIF and REITs there was nothing. Dedicated REIT, I think for central public sector enterprises to recycle their assets, to monetize their assets. Is this something very good for real estate? Because it will open up lot of land bank for the real estate developers, Mr. Mota and Mr. Zia. Mr. Mota, how do you see that
No, I
provision?
think we have to see the detailed policy on this, but
Mm.
definitely this is a welcome move, because this will unlock the unutilized or underutilized land. We have to see the fine prints, whether the government will do the development themselves, or they will do in PPP, or they will sell it like rail land authorities selling their land parcels on long-term lease, and those when they bring the stock in for development, it has to be more of the developer friendly or the customer friendly approach, because sometimes they offer 30 years lease and those kind of unpractical way where it is very difficult to plan a project, because 30 years nobody is interested. Like for example, port trust is monetizing their land, but they are giving only 30 years lease, and in 30 years lease and they want annual lease rents, which is not workable for housing sector or many of the sector. They need to think of long term leases, they need to be flexible in use of the land, they need to take one time premium and with token rent. Those kind of policy will attract more developer and maybe a better value for the authority. Yes, they can define the land use, they can have a land use plan, and that will be good. So that's my take on it.
So as an announcement, that's good, but detailing, we need to find
Detail.
out what's the detailing. Gulam, the one is about data center, tax holiday for data center. Again, there is no detailing, there's no quantum mention, but they say, the government says that we'll give tax holiday for data centers till 2047. And then, as I mentioned, opening up of government properties for REIT and for monetization. How do you see these two factors playing for real estate?
Well, anything that happens for data center will be a good news. As Mr. Mota said, we need to really wait and watch, because most of these are right now statements of intent. How are they going to do it is something which we have to see. But that said, when we are focusing on land for from government authorities, I guess a lot of work has already been done. For talking about, say, RLDA. RLDA has done a few of the very highly priced kind of catches for real estate in Mumbai. In recent times, they have done fantastic deals in Mumbai, and they've already crossed that bridge of 30 years, 60 years, 90 years. RLD actually gives 90-year leases if it is a residential property, and 60 if it is an office property. 30-year leases passe. I agree that Mumbai Port Trust has to still learn that lesson. Quite a few of them actually start with 30, then move to 60 and 90 as the markets call for. And I agree that it takes a little time for all of them to learn those lessons. Why I don't understand why can't they learn from the lesson learned by any
By
other
RLDA.
government body and adopt it? That is not happening. Well, I'm sure it'll go. It's going to take time, but I believe that railways have got one of the most evolved process for bringing the land in the market. In fact, the recent ones that we saw in Mumbai, a few of these high-end transactions are actually gone JV way, because they're going in with a certain portion of the land kept in of a built asset kept with railways, which is a great opportunity for developers because you don't have to pay the whole money upfront. So there are these various ways that are coming up from government bodies. So while it's a lesson learned, but many of the bodies which are coming up fresh in this domain are not adopting to the market realities. I'm sure they also will soon.
I hope they
What
will take
I'm
some intelligent transaction advisor who can structure the transaction in a win-win situation where they can attract more developer for bidding and increasing the value of property for the authorities and making a good business model out of it.
True. Yes, that's what is
right.
happening. Many of them have actually picked up good lessons, or they've learned good lessons. They've got good people advising them. And like last year, we saw even CWC, Central Warehousing Corporation, also bringing in as big a name as Blackstone to join with them. That was a absolute a new movement where a grand player like Blackstone has entered into a government initiative. So that is something which is opening up in a big way, and I am very positive with government opening up their land parcels. Real estate per se will have good time ahead.
Right. And with the focus on infrastructure development, I think that's a good news. So what I'm reading is that the sector is not nervous. Sector is very confident. It is if there is no bad news, it's a good news. So, but for the common man, for the home buyers,
Yeah,
uh,
let me interrupt you, Sapna. Real estate player are never this. We are daredevils, okay? But all the we always look for our customers. All we look for the middle class customers. If they could have given this Section 24B benefit, increase the limit, inflation adjustment, as I told you, or if they would have done something about the affordable housing definition, then middle class, a lot of the middle class who are, stuck in the last mile connectivity today, could have gone into the bracket where they could afford a home. So that has not been done. That is the only thing real estate was expecting. We are not expecting any tax benefit for ourselves. For all we require is for our customers. And many of the, as Gulam was saying, that most of the developers are not getting into this affordable housing business is simply because there is no business model. See, I can do 10 out of one project, 1 out of 10 project as charity, as no profit, no loss. But I can't make a business model where there is no profit. Bulk of my business cannot go. There can be lesser profit, but there has to be a business sense where I can sustain at least my organization cost, and my minimum profit should be there. So that has not been done. That is the only thing where we were expecting.
Right. So there was no provision, as Mr. Mota said, for affordable housing segment, mid-income housing segment. There are no income tax rebates being announced or more cash in hands of common people. From the people perspective, Gulam, how do you see this budget? Disappointing? Okay. How do you see from the people perspective?
I would say it's okay. Because just last year, last 365 days, the common man has got lots of respites. So continuing that game would not have been possible in any case, whether it was on income tax rate reductions, etc. So a lot of incentives have already come on their side. At Diwali time, there was a big bumper on the GST situation as well. So overall, the common man is already happy. Now, the problem is about housing. And as Mr. Mota was talking about the discussion, typically when you talk about affordable housing or mid to lower end of housing, the discussion typically goes to, giving respite for the interest paid on the home loans and so on. Well, here, even I am a little confused, I would say, not upset or frustrated, because the new tax regime that they launched last year is something which is actually taking away all the concept of all those benefits is gone.
Correct.
So even if you would jack it up from 2 lakh to 5 lakh, ultimately and gradually, the government is also clear that you have to move towards the new regime. Today you have an option, you can continue to be with old regime, but it will truncate gradually and slowly we will move to the new regime, in which case all options will be open for any taxpayer. In which case, investing or buying insurance vis-a-vis buying a home loan is something which will be decided by the end user.
Correct.
And that is where I am a little confused, because the country has always been laying so much of emphasis in owning a house. As a culture, we believe that anybody who is out there has to someday own a house. And this was a motivation which used to be there in our system for a long time. And with the new tax regime, where we are actually taking a home loan at par with going for an insurance or anything else, then the motivation for the Gen Zs and millennials will be much lesser to go buy a home. And that is something which I would rather focus on. That is something which I would rather try to find a solution to. I agree that the new tax regime is specifically for simplicity, flexibility. Those options are there for which the new regime has come. But then in that bargain, somewhere we may end up giving a kind of level playing field for people to decide whether they want to take a home loan or they want to buy insurance or any such other material. So that is where my worry is more in that direction. And I would also I would love to see the bodies like Naredcos and MCHIs and so on and so forth, Credis, etc., to come forward and discuss this aspect. How do we bring in motivation back into the Gen Zs and millennials? Because if you're moving to the new tax regime, you will be left with no option or no motivation. So how do we change that is something which we need to work on.
Very important point. If you take away the tax benefit of taking a home loan, what incentive is there for young young population to invest in a home or buy a home? one important aspect which I want to talk about this budget is, has this budget done anything or enough to improve ease of doing business? Gulam, let's start with you.
Well, I think ease of doing business is not really something which you expect from a finance bill or a budget. That's something which is outside the purview of that. However, let me highlight something which I pick up a great initiative that the government has now brought in a concept called challenge, a challenge approach to funding. So what's happening is, it's not because of a certain state is making a good pitch, so we'll get the funding, etc. You have to show that you deserve to get that funding from the center. So
Okay.
one of those aspects is actually improving infrastructure. Second is ease of doing business. So if a state or a city comes up with a solid concept where they are demonstrating their ability to put up the right infrastructure and also demonstrate ease of doing business, will the funding be coming their way? So this is a great initiative where it's not just politically motivated, but also they're creating a competition culture amongst all the cities, ULBs, urban local bodies, and states, etc., to deserve those funds and capital that's coming from the state, from the center. For example, right now they're talking about tourism. In this budget, I saw that some 50 odd tourism destinations
Right.
at a wholesale, like complete plans have to emerge. Again, that's where they're talking about a competitive mechanism, a challenge. They're calling it a challenge mechanism wherein those cities or those states which are asking for those fundings will have to demonstrate that they are better than the others. And then it will come. It will not come automatically. And ease of doing business is a part of that initiative. So for me, ease of doing business will be the focal point of the states and ULBs if they want their capital to come their way.
Very rightly said, because ease of doing business is more state related, state government related. Mr. Mota, how do you see, has this budget motivated ease of doing business, done anything
Oh,
for
that
ease
is,
of doing
you see,
business?
ease of doing business has been a mantra for last 15 years. And now from ease of doing business, the next level is speed of doing business. It is just not this ease, but the speed also. How speedily? Because ease of
True.
doing business, some states make policy, make it online process, but there is still a rate tapeism. Still, the files get stuck. Still, there is a process. There is a table-to-table file going, and maybe those are e-files, and somewhere getting stuck. So, speed of doing business is also very important with ease. With it, how much time it is taking to dispose of a particular, proposal, because investments are huge. If the cost of investment, interest or overhead, that is very important, and particularly in real estate, it is very important.
Correct, correct. Very true. Not only the ease, but also the speed and the financial aspect to it. So let's summarize this entire analysis that we have just done for the budget. From both my expert speakers, one word that you will use to describe this budget for real estate. Mr. Mota?
Well, I would say that it is business as usual. There's no
Okay.
change, and
Business as usual.
business
Okay.
as usual. Our expectation were something for the middle class home buyers, but the finance minister chose not to provide anything, as according to them they have provided enough in past, so that let it be like that only.
Okay. Okay. So business as usual, Mr. Mota says for this budget for real estate. Gulam, your one word on this budget for real estate.
Well, I would be a little disappointed because not much has come for affordable housing. Otherwise, the big bang that we were expecting was to be in land reforms. Nothing has happened there. And that will be the day we start talking about land reforms through our finance bill and budget will be the day when real estate will see the next leap of faith.
Okay. So business as usual and
I would also like to say it's not that always some financial stimulus is required. Sometime by policy intervention also the government can improve the business atmosphere. For example, Kredai has been advocating for a rental housing policy, rental stock policy, which
right,
is there
right.
in many of the countries. You see, we have a huge migratory population which is coming to for work to the urban centers or for education, coming from other states. So we need to have a policy. We need to firstly build a rental housing stock. then we need to have a policy for people to encourage investment. For encouraging the investment in that sector, we need to have a policy in place. See, the rent control laws are archaic in many, although the government has introduced the model, the new models of rent control, the state has to adopt them. Then there has to be some kind of incentive in the local body tax or income tax, or people who are taking the rental accommodation, some benefit to them at least, because these are all lower middle class students and those kind of people. So rental housing is something where the government need not invest a big amount. It is simply a policy framework which could have created a good business model and
Correct.
something for the society.
Correct. Just I will not ask you to rate this budget because I think I've got the feel of the room. Disappointing on few fronts. Nothing. No major announcements. More cautious budget. More kind of a stable budget. More like a statement of finances by the finance minister. If I have to ask you, which has been the biggest winner segment in this residential, commercial, infra? Which segment has been the winner in this budget? One segment, Gulam.
I think infrastructure and logistic there is some benefit because
Okay.
of the some corridors and high speed rail corridors and things like that. That infrastructure and logistic warehousing, those sector will pick up.
Okay, Gulam, your views. Which segment has been a winner in this budget?
I'll go with Mr. Mota. This is infrastructure segment, high-speed rails and the Siliguri to Surat freight corridor. A lot of those things, even for tourism, etc. A lot of work has happened, but these are all things which will then create opportunities for real estate in times to come. But infrastructure is definitely the winner of the game.
Correct. So I think today's discussion has made one thing clear. This budget, Union Budget 2026, has laid out an important direction, but the real impact we'll get to see through execution, policy follow-ups, and market response in the months to come. So thank you so much to both our esteemed guest speakers for taking out time and speaking to Realty Plus and sharing your insights, and for all the viewers who have joined for this live session. Thank you. That was our budget analysis for
Thank you,
now for
Sapna.
this
Thank you
budget.
very much for inviting me.
Thank you, Mr.
Thank
Mota.
you so
Thank
much.
you,
Thank you,
Gulam Zia,
Gulam.
for taking
Nice
out
talking.
time.
Thank you so much, Mr. Mota. Thank you.
Bye. Bye.
Thank you.